Hello, fellow investors. Welcome to another episode of Ritter on Real Estate, where we teach you how to passively invest like a pro. Today, I've got a very special guest. I think I say that mostly, but I really believe it this time because I'm excited to have Kevin Bupp on the show. Kevin, I'll read more about you, then I'll tell you my own personal experience. So Kevin is the founder and CEO of Sunrise Capital Investors, which invests in mobile home parks, parking lots, apartments, offices, and single-family homes all across the U.S. He's got 16 years of experience in educating investors to locate, acquire, and create higher than average returns from the widely misunderstood niche of mobile home park investing. He shares this expertise through the Mobile Home Academy and also is the host of the Real Estate Investing for Cash Flow podcast, which has become one of the hottest real estate podcasts on iTunes. And that's exactly how I found you probably 5 years ago, was through that podcast when I was really getting ramped up and like really immersing myself in real estate. I think your podcast was one of the first that really got me going. So much appreciated. Thank you for helping set me on this path.
Absolutely, Kent. And thanks for having me here, man. Excited to be here.
Yeah, no, this is great. And so Kevin, you've accomplished a ton, right? I mean, just reading through your bio, but give the folks some background on kind of where you started and how you got to where you are today.
Yeah, no, absolutely. And I need to update that bio. It's I think it's over 20 years now. So I got
Oh
got
yeah,
my
there you go.
start. Yeah. So that's a little dated, but it is what it is. Yeah. So leading into the story, how I got started, I bought my first property at the age of 20, but ultimately I always like to joke and say that real estate kind of found me. I didn't find it, right? And so I can't take all the credit for, having this huge desire and then ultimately diving into it. It was brought to me by a gentleman who ultimately became my mentor. And, funny story is that it was a girl I was dating while I was in college. It was her mom's boyfriend. So his name was David, and
Nice.
David was a local real estate investor. And I got to see him, and get to know him after I, would go visit my girlfriend in their house, and he'd be over there every once in a while. And we'd just chat and got to know him a little better. And ultimately, formed a friendship and found out what he did. He was a local real estate investor, owned for the most part, single family and small multifamily properties, was a buy and hold guy. He had a number of rentals, and he lived a very different life than what I had, lived growing up. I mean, we never went without, had great parents, always had a
Mhm.
roof over our head, and never realized that we were any different than anyone else. But ultimately, he drove a little bit fancier car, dressed a little fancier, and
Mhm.
seemed to have a lot of flexibility in his day-to-day life. My parents were at work 9 to 5, Monday through Friday, and David would happen to be around random days of the week, right? And
Yeah.
so I thought that was pretty neat. And long story short, David invited me. I think he maybe saw a 19-year-old at that time with a kid with no direction. Just I didn't really have. I didn't know what I wanted to do. I was going to
Sure.
school, going through the motions, but I didn't really know what I wanted to do. I
Yeah.
didn't know what I wanted to sink my teeth into. So going to school, attending bar part time, and anyway, David, invited me to a 3-day workshop down in Philadelphia. His partner couldn't attend with him, and so I went. Didn't know what I was getting myself into, but ultimately I knew it was like a $5,000 workshop, and that he was inviting me and just basically asking me to pay for my own hotel, and that was it. I'm like, well, that's
Yeah.
kind of a good deal.
Yeah.
And
Yeah.
I went and I met a lot of folks that were doing a lot of deals. Flipping houses for the most part, or wholesaling houses. They weren't really in the rental model. It wasn't what this boot camp was about. But ultimately, I was just very intrigued by folks that I felt were very similar to me. They weren't any smarter. They just knew something I didn't know at that point in time, and
Yeah.
they were doing deals where they were making $20,000 and $30,000 a pop, and they were doing dozens of those a year, and that just
Mhm.
amazed me. And any event came back from that, was overwhelmed, excited, and I knew that if I didn't have, I knew if I didn't take action, which I didn't know what the next steps were really, but I knew if I didn't actually dive into it, that I would ultimately lose interest, get back to normal routine and would forget all about it. And so I basically went to Dave and I offered my services to him. He was about 25 years older than I. And so I
Mhm.
tried to figure out where I could add value to him and his business, in his life. And technology was kind of it. And aside from just helping him with, the technology side of his business, create a little bit more efficiencies, I basically did whatever he asked me to do. I was meeting with contractors. I would go pick up supplies. I would, draft documents, deliver
Mhm.
documents, get things signed. anything he asked so that, ultimately I could be around him. And so that's what I did. I basically spent about, nonstop outside of going to school and, again, tending bar in the evenings. I would be at his office or out in the field, probably 40 plus hours a week, as much time as I could be around him and just basically absorbed as much as possible.
Yeah.
And then at the age of 20, I bought my first property, and that was kind of the start of it, single family home. And I didn't reinvent the wheel. I just basically I utilized the same system that David had taught me. Again, wasn't
Hmm.
trying to fix because it didn't seem broken,
Right.
and that's what I did. My early 20s, I basically accumulated quite a significant portfolio of single family and small multifamily homes, and yeah, just did that all the way up until 2008, and that was kind of a pivotal moment, I guess you could say. That's a nice way of putting it,
Yeah.
of really shifting my direction moving forward, and ultimately got me to where I'm at today, as far as more involved, much more involved, pretty much entirely involved in commercial real estate, with
Mhm.
today an emphasis being on mobile home parks and also parking lots. So again, try to give you the condensed version of the story
Gotcha.
there.
Gotcha. Yeah. You just squashed 20 years down into a
Yeah,
few
yeah.
minutes. So yeah, I appreciate
There was
that. But
lots of lessons, lots of failures, lots of good, bad, and ugly, things that happened those 20 years. But
absolutely. Well, I mean, the thing that really sticks out to me is your, I mean, one, you have this opportunity come up and you take advantage of it. I think so many times, we can be presented with opportunities, and because you've got your head down kind of in your day to day or whatever, these opportunities just pass us by. So you presented this opportunity to go to this conference. You realized what an opportunity that was, and you just jumped at it. You didn't know what it was going to lead to, but you just jumped at it. So one, just taking action, and then two, just isn't it amazing, like the how like just one experience can change your perspective and
Mhm.
change your mindset and send you on a totally different path, and look at what all that's led to today. So I think that's pretty
Yeah.
incredible.
No, it was a pivotal moment in my life. That's really my rich dad, poor dad. And my real dad wasn't poor, but
Yeah.
it was very much 9 to 5, had a 401k, really
Yep.
didn't have any investments outside of that at all. That, they did own their home, but, had lots of liabilities,
Hmm.
and just it really looked at money in an entirely different way than that of David. So it really was my rich dad, poor dad story. And that really led me down the path, not just the real estate, but David had a background in sales, and so he was very much, this is like back in the day of the cassette tapes. He was very much into,
Yep.
like, self-help, so like Zig Ziglar and
Yep. Yeah. Yeah.
all those greats, and basically gave me a pile of, again, I think CDs were prevalent then, but like gave me a pile of like old cassette tapes and books. It was like, here,
Yeah.
man, like this will come in handy as well. Divulge this information when you have free time, and I think that it will carry the right direction in life. And so anyway, I was a huge
Yeah.
proponent of just self-help, and just, trying to better myself, both as an individual and as a business owner.
Yeah, I think you're so fortunate to be exposed to that so early in life, right? And be able to set on that path. I mean, so I have similar background growing up. I mean, very blue collar. My mom was a
Mhm.
school teacher. Dad was, he was kind of a, a lower level employee. We didn't make a ton, but everybody got by, and we were always happy. And yeah, when you have that, but the thinking about, basically there was no investing. It was just saving, right? It was all about
Yeah.
saving,
Yeah.
saving, saving. And so
If there
coming
was any left
into
over
that.
to save.
Yeah, right. And then
Yeah.
making sure you got enough set aside to, to drive down to Florida and do that vacation that we do, things like that. But yeah, just a
Yep.
total mindset shift of this idea of investing and using your investments to kind of pay and supplement your income versus just saving and trying to build up a pile of cash. I think just totally different. So I understand what you're saying, coming from that mindset and having that shift and that kind of rich dad, poor dad story.
And I didn't know there was a different way. I think that's I think that's the challenge is,
Yeah.
I view myself as lucky because I was exposed to it and I wasn't looking for something different, right? I didn't
Yeah.
realize, maybe later on in life I would have, but at that point in my life, I didn't realize that there was something so drastically different than that of what I grew up with. I just had never
Hmm.
been exposed to it. But I'm very grateful for David coming into my life and showing me a better way, a better path.
Yeah, and now through your podcast and the academy and everything you're doing, you're showing others that better path. So I mean, that's the reason that I started this podcast, right? Same, probably similar, is like, man, I found out about this in like my early 30s and was like, holy crap, like why didn't I know about this? Yeah, 15 years earlier. I've been doing this the whole time. Like I didn't even know that this way of operating, kind of working outside the normal system existed. And so, yeah, I think it's the more people you can get in and tell about it, the better. So you mentioned that you invest in all, you've invested at least in all types of asset
Hmm.
classes, but what's your favorite asset class?
That's a great question. And, uh, I'd say for the past 10 years, going on 10 years, it's really been mobile home parks. And it's still, a favorite asset class today. I will give, full transparency that I've as a GP, I've owned just about every type of real estate. Um, but even today, as an LP, I'm invested in multiple other asset classes, and so
Hmm.
this isn't a mobile home parks or better
Hmm.
conversation. I think they definitely carry their own weight, in comparison to a lot of other asset classes. But I love self storage. I love medical office.
Yep.
I do have some stuff in the office space, which is still doing fine today. Retail, not a huge fan of it today, but I don't have any investments. But I think that you can make money in just about any type of asset class, right? It's all about
Yeah.
what is best aligned with your overall philosophy and ultimately what's going to help you achieve your goals, really, because the real estate's only a vehicle. It's just a vehicle, and there's
Right.
lots of different types of vehicles, but which one is best suited for you and in your business model. So mobile home parks have been that. And aside from mobile home parks, about a year ago we started purchasing parking, and so parking lots and parking garages and in,
Hmm.
in, in downtown central business districts and tourist destinations. So I'd say those two now are our favorite. And they have a lot of similarities,
Yeah.
and they complement one another quite well.
Interesting. Yeah, that's really interesting. So, so a lot of the listeners that a lot of we spend a lot of time on. We do diverge from time to time. We spend a lot of time focused on a multifamily on this show. So,
Hmm.
tell me a little bit about what are the differences in investing in a mobile home park versus investing in a multifamily asset?
Yeah, I mean, there's lots of similarities. I mean, they both are multifamily for all intents and purposes. They are multifamily properties. With the
Right.
mobile home park, I mean, I think some of the big differences, is that there's standalone individual structures, these mobile homes, and there's a couple different types of ownership models that exist out there. Back when most of these mobile home parks were built, like the majority of parks that are out there in the world today were built, in between probably the 50s and the 70s. Like that's when the proportionate portion of them were built. Back in the day when they were built, it was kind of a build it and they will come. A developer goes in, puts the infrastructure and put the roads in, and then ultimately the end consumer, the homeowner, buys their own mobile home and they move it into that community. And so that park owner doesn't own the mobile homes. They just,
Mhm.
their responsibility is to maintain the infrastructure. So the water, sewer lines, the roads, any lighting, common areas and things of that nature. And so, in that original model, and that still exists today, there are some hybrids, but, comparing that original model, and we own many parks where we don't own any of the homes inside that park. I think the big difference with multifamily is the operational intensity of the day to day, right? Because
Yep.
we're not fixing plumbing, we're not fixing ACs or roofs or doing make readies or anything like that. Ultimately, that's the homeowner's responsibility. So our only job is to keep the park looking good and enforce the rules, fix any infrastructure problems that occur. Now, with that being said, the model's kind of evolved over the years, and some park operators or owners have chosen to go a slightly different path than the original, where they don't own any of the homes. And so I think where there's become a lot of similarities is in models where you actually own the mobile home. So there are many parks that we own today where we own a portion, a small portion of the units inside that park. So we're responsible, they're rentals. We're responsible for maintaining the roofs, maintaining the HVAC system, and all the mechanicals that go with that unit. And so that's a much more similar model to that of a multifamily. And again, I'd say that's probably the more common model today in the park space, where there's a majority of the homes are owned by the homeowner, and then a smaller minority is actually owned by the park as either rentals or rent to own, some type of creative financing strategy. So, but other than that, there's really there's not. I mean, they're both multifamily, but they have a lot of similarities and a few things that are different. I'd say the only big thing that sticks out And it really comes to when you're looking to get in the mobile home park space, if you're looking to get into this business and you're looking to build some scale, and I'm going to compare it to like multifamily, looking at
Hmm.
larger complexes, 100, 200 plus unit complexes.
Sure.
In the multifamily space, the common path for a lot of investors is to, whether they're syndicating or buying it themselves, it doesn't really make a difference, is to utilize a third party property management company to manage that larger asset. And there's no shortage of third party management companies across the US that specialize in managing multifamily assets. That is not the case in mobile home parks.
Hmm.
There's a couple handfuls of management companies. Most of them are regional. There are a few that are nationwide, but not many that have a great reputation, and not many that ultimately would do probably a better job than what you would do yourself. So that's where the scaling challenge comes in. Whereas with multifamily, you could go buy 2,000 doors, hand it all
Yeah.
off to a property management company. You've got asset management, responsibility. But like
Yep.
to buy 2,000 units of mobile homes, you have to ultimately build out your own property management company. So you got to be able to scale and build a
Gotcha.
property management company simultaneously while you're building your investment company. And that becomes there's a certain point to where you got to make hires on the property management side, and that business is not profitable until you get to a
Yep.
certain scale. And so you've got this weird period of time where you're probably feeding the beast, the property
Hmm.
management company, in order
Yep.
to scale that business and get past that pivotal point.
Man, that's really interesting. I'm glad you brought that up because that's exactly where I wanted to go. As I was going to ask, how do you manage
Yeah.
these mobile homes? So that's a great explanation. And so as you build out that management structure, are you hiring people that live on site? Is that what you're looking for because of the less operational intensity, or are
Yeah.
you still bringing folks in that
Uh,
maybe don't live on site and kind of still
both.
manage? Okay.
Yeah, both. So every one of our communities has an on-site property manager, community manager, whatever you want to call it.
Yeah.
I'd say half of them live on site in the community, and the other half live off site close by. And we have an
Gotcha.
office there. They come in to work out during the day, and so they handle things such as notices being handed out, rent collection. Um, just general rule enforcement, ensuring that residents are keeping up with their yards, and the disrepair of their homes and things of that
Yeah.
nature. And so but then on the property management side, and so that's at an asset level, and then on the actual property management side, we actually have a full-blown staff. We got an asset manager, we've got a called a regional director of property management, someone that
Hmm.
oversees all those on-site property managers, and then a bunch of back office staff that makes those wheels spin on the property management side. So I guess it's not much
Gotcha.
different than that of a multifamily, because most
Yeah.
multifamilies, you're gonna have some type of on-site leasing agent, or assistant property manager. You're gonna have someone there, unless it's a really small asset. But we're talking 50, 100, 150 doors. You're gonna
Mhm.
have someone, a presence there on site, that's going to help manage that day to day.
Gotcha. Gotcha. So is your I guess from a mobile home perspective, as you're looking at the market now, and you guys are obviously still looking to acquire. I mean, what is it? Where is the mobile home market now? I guess like what excites you about it? What also worries you about it if you see
Yeah,
things coming?
yeah, that's a great question. And I'd say one of the big exciting things about this industry is that it's grown in popularity, and on the flip side of that, that's also one of the downsides I see.
Yeah.
There's a major supply demand imbalance with mobile home parks. There's more. It's the
Hmm.
only asset class that has a diminishing supply. So there's more mobile home parks that either get redeveloped or shut down for one reason or another every year than new ones that get brought online. And so we have this finite supply. That's a problem when you have increased demand in a particular asset class. And so we've
Yeah.
seen over the past year, cap rates have compressed south of that of multifamily. Comparatively
Wow.
speaking, if you take some of the secondary markets across the U.S. and look at a B class multifamily to a B class mobile home park, and similar size and scale,
Hmm.
there's a good chance that mobile home park probably will trade at a slightly lower cap rate than that of that multifamily, which
Wow. I didn't realize that.
yeah, there's been a lot of private equity that's come into this space, lots of
Hmm.
institutional capital, and the likes of Blackstone or Carlyle Group. Those guys, when they go somewhere and they get into a sector, they've got to be able to deploy, hundreds of millions of dollars in order for it to make
Right.
sense for them, right? And so, and their
Right.
cost of capital is very different than that of you or I. All right.
Yeah.
They got a different source of capital. And so that's definitely driven cap rates down. It's driven an increased demand for, again, this finite supply. So it's a good thing that those folks have come into the space. It's added a sense of legitimacy to our
Yes.
industry.
Makes sense.
It's also created banks to become aware of our sector, whereas maybe 10 years ago it was a little bit of a challenge to get financing on some maybe less than perfect mobile home parks. You had to literally go through 15 lenders to find one that even understood the asset class. That's very different today. So now there's no shortage of lenders that will lend on both fully stabilized mobile home parks as well as turnaround assets. And I think that's really only, that awareness was only created from the larger players stepping into the space and making everyone else aware of it. And so again, it's kind of a good thing and a bad thing because they've created a lot more competition, made it a lot harder to find deals that, tend to pencil out for groups like us. So, but yeah, it's again kind of a flip flop there of pro and con of those big guys coming into the space.
Yeah, it's great if you're an owner, right? And cap rates are being compressed around you. It's a little more difficult if you're looking to buy. And so if you have both, you got to weigh both sides.
Yeah, and we don't ever consider ourselves sellers. We will just like I think everyone should always consider selling at the right price, right? There's always a price that makes sense, even if your plan was originally to hold for X number of years. There's always a price that should be able to justify you divesting of that asset.
Right.
But generally speaking, we're buyers. We're buyers and holders. And,
Gotcha.
we have sold off a few things over the years that don't necessarily fit our portfolio today or where we think our portfolio is going. Maybe smaller assets or markets that we don't really want to expand our footprint in. However, over the last, I guess you could say 8 months, we've sold a few assets that we had never intended on selling only because the prices, we could realize, 12 years worth of gains immediately, and it's like, how do you not justify selling, and
Right.
I don't see the path. I don't see the path to where, what the sales price is today, what someone's willing to pay for it. I don't see the path of how they're getting there. I don't think the value is what they think it is. And so in that instance, and that's not saying there's not better operators out there. There's surely folks that can skin that cat in a more efficient manner. But in those couple instances where we've sold, I struggle to find any sense of sensibility of the prices that are being paid. So, and I'm sure you've seen it in the multifamily as well.
100%.
Anyway, so
I mean, but yeah, I mean, what you said, yeah. So you essentially got an offer you couldn't refuse, right? And when that happens, and it's just a smart business person that's going to take advantage of that. I mean, if you can lock in those gains, I mean, that's a no brainer. And I mean, we've seen the same thing on the multifamily side. I mean, it's way more similar, I guess, than I understood, as far as what's happening from a cap rate standpoint, what's happening with competition, the limited supply and outsized demand. I mean, there's just a lot of similarities there. So when you guys are, like you said, you're maybe not struggling, but it's more difficult in the current market to find deals, as you said, pencil out. Right. So when you're looking at a deal, like, what are you looking for? Like, what makes that deal pencil out for you?
Yeah, I want to know that, that we can ultimately find a logical path within the first 2 years to, somewhere between 8 to 10% cash on cash returns. And then that we can see, again, a clear path over our term of ownership to a 16 to 18% IRR. So I mean, that's
Gotcha.
aside from things such as assuming that the market's a good market, and assuming that we're comfortable with the asset itself, size, and the demographic that we serve, and what have you. But as far as from a financial perspective, that's what we're seeking as far as returns are concerned, and that's what it's got to look like for us. But it's got to be a really clear path. It can't be well, if this goes exactly right and that goes exactly right over the next 3 years, there's a good chance we'll get there, right? Because there's a lot of variables. I think we're going to see a lot of variables here over the coming years. We don't know what we don't know as far as rates are going to go. I know that the Fed keeps saying they're going to keep them low here for the next couple of years, but it's really hard to bank a business strategy on that.
Sure.
So
yeah. No, I think that makes a ton of sense. I mean, so you're really looking for things similar again, kind of to the
Yeah.
multifamily space as
Yeah,
far as
absolutely.
return profiles. And yeah, I mean, I think that's really interesting. I think the one thing that I know that you kind of alluded to, you said the operational. I don't remember the exact word you used, but essentially it's there's less operating expenses on a mobile home
Hmm.
park, right? For the
Correct.
most part, especially if folks own their own homes, right? So I imagine you're typically getting you're seeing a better kind of NOI, better income for the same amount of value. Is that true on a mobile home park?
Yeah, that's a good way to put it. That's a good way to put it. Yeah, I'd say the average mobile, again, assuming that the mobile home park, the owner doesn't own any of the homes, and assuming that there's nothing weird with like a lot of mobile homes you'll find in rural areas that have self-contained wastewater treatment plants to handle the sewage. Those are very expensive to operate. They might be running
Mm,
on a well system. Those are
mhm.
expensive to operate. But assuming that's got municipal utilities, again, all the homes are owned by the residents, the homeowners. You're going to run somewhere between, I've seen them as low, maybe it's like a 30% expense ratio of gross to, if it's in a higher tax area, maybe 35 or 40%. So typically
Yeah,
where your typical multifamily is probably going to run at like 50 or 55%.
yeah, I'd say yeah, like 10% higher than that. So
Yeah.
yeah, there's some value there. I'm glad you brought up rural markets because I know that that's where a lot of these mobile home parks are located. I know one thing that as multifamily investors, we have gotten more comfortable with, but have traditionally been uncomfortable with these more rural markets, right? Where you find these mobile home parks. So how do you guys, I guess, what do you look for in a market? How do you become comfortable with maybe a smaller population size?
Yeah, and we won't buy in a rural market. I mean, there are parks in rural markets, but for the most part, like we're buying in similar areas prior to that of where you're buying. And, we're not going to
Okay.
buy out in the middle of nowhere. There's parks, a lot of parks were built, if they were built 50, 60 years ago, they were built to what was back then maybe the outskirts of town, right? Maybe it
Mm-hmm.
was outside the city limits. Well,
Mm-hmm.
in the past 50 or 60 years, that city has
The
grown,
city's
and
expanded.
more than likely
Gotcha.
now that that mobile home park is now in the city limits, and surrounded by development, which is again why there's a this finite supply, because
Right.
parks that have a much higher and better use today, right? Developers
Mm-hmm.
purchase them, and
Mm-hmm.
whether they build a high rise or multifamily property or some other type of commercial project, um, that deems it necessary to tear that mobile home park down. That
Yeah.
again was once kind of on the outskirts of town, but now it's in the path of progress. So as
Right.
far as like just like from like a minimum standpoint, like we want a
Mhm.
population of at least 100,000 in MSA, and that's a really small MSA, but that's kind of like an absolute floor of what we're seeking. We want
Yep.
to know that there's job growth, right? Like not just stagnant, but like we want to see that there's active job growth happening in the area, right? Jobs drive the demand for housing. And so
Absolutely.
again, lots of the same things you guys look for in the multifamily space,
Yeah.
that we're looking for, and a lot of times we're serving a very similar demographic. Most of what we have found is that a lot of the residents we serve, had historically been renters, apartment renters for their entire life, whether they've had been renting for 1 decade or 3 decades, what
Mhm.
have you.
Mhm. Mhm.
And they are not at they're not at the point in their life where they've got the money for wherever the market they live in to actually buy a stick built home. They don't have the
Yep.
credit and they don't have the down payment to buy a stick built home, but they want to have their own home. They're kind of sick of having
Oh,
a
interesting.
neighbor
Yeah.
above them, below them, beside them, having to
Mhm.
walk from the parking lot in the rain to the entry of the apartment complex. In the mobile home park, they
Mm.
can have their own little standalone unit, right? They don't own the land, but they own the home. They can put Christmas lights out. They can have a little covered, carport area so they don't get wet when they walk in from the rain.
Yeah.
And they don't have, Susan next door vacuuming at 2 a.m. in the morning that they can hear, right? So
Ballroom
like,
dancing. Yeah.
but we've found that most of the folks that live in our communities that own their own homes were, long-term renters prior to buying, and now can somewhat live the American dream of home ownership, even though they don't own the lot, the lot itself.
Yeah. Well, that's really interesting. And yeah, I was thinking, I actually thought you were going to go a different place, but that's an interesting idea of folks that, yeah, as like you said, that stick built home, as prices continue to inflate and that becomes out of reach, this is a great opportunity for people
Absolutely.
to own their own home. And I hadn't thought about it that way, but I see a ton of value there. Where I thought you're going to go and what I was going to ask is, have you seen in markets that have like extreme rent growth, right? I mean, there's markets where rents are growing 8, 10% a year.
Hmm.
Are you seeing people that are like priced out of apartments and kind of moving maybe to a mobile home as an alternative, which could be a cheaper alternative?
Yeah, no, absolutely. I always say that you take any market, pick any of the markets you guys have, apartments and they own apartments in. And I will guarantee when we're talking about an apartment large enough to house a family of four, right? So
Hmm.
either a 2 or 3 bedroom apartment. I guarantee that the mobile home park of the similar quality in the same market is going to be the cheapest option of housing for that family of four.
Right.
It's going to be like it doesn't mean that it's the lowest quality,
Right.
but it's going to in that any given market across the country. And this is assuming that you're not going to cram a family of four into like a studio apartment, right? I mean,
Right.
something weird like
Reasonable
that. I'm
size.
talking like, yeah, like it's got to be like apples for apples, a 2 bedroom, 2 bath apartment to a 2 bedroom, 2 bath mobile home in a similar quality park with similar amenities, swimming pool or things of that nature. You're going to find that the mobile home park is inherently cheaper than that, or better value than that of the apartment. So,
Yeah.
I
Yeah.
guess the only, the one, I guess you could say the one downside, if there is any, is with an apartment, you have a little bit more flexibility as far as transient in nature. And so, whether it be a
Hmm.
12 or what have you lease, I mean, you can kind of just get up and go thereafter. Whereas if you own the mobile home, doesn't mean you can't sell it. You can surely sell it, but like you have that burden of having to sell the home if you decide that you want to move out of the community, where you either sell the home or you can move the home to a different community. But
Yeah.
you don't have that same flexibility that you might have in an apartment. So the allure, I think, to a lot of folks that live in apartments, if it's not an affordability issue, it's the allure of not being held down or stuck to one place for a long period of
Hmm.
time.
Hmm. I mean, it sounds like a lot of positives to mobile home investing. I appreciate you educating me on it. It sounds like as an investor, you're able to get similar returns, but on a product that actually is more affordable for more people, which I think is really attractive.
Well, it's yeah, no, absolutely. And then some of the other big benefits is, speaking to maybe the flexibility that a tenant has in an apartment and a mobile home park, that equals a lot less turnover. And so if they
Sure.
own that
Yeah.
home, normally they become very sticky. They stay for a long
Hmm.
period of time. We've got tenants that live in a few of our parks that have been there for 35 years. They own their
Hmm.
home. Um, and then ultimately what occurs is if they decide that they do want to leave, again, they'll either, put their home up for sale, which is more common, or they can move that home. If they move that home, it's pretty expensive to move it. If they're moving it
Right.
locally, they're probably going to spend $4,000 or $5,000 to move it and reset it. And so what most folks do is they just ultimately turn around and sell it. And so the cool thing about that is that while they have that home up for sale, they're continuing to pay lot rent. They find someone, a prospective buyer. That buyer gets qualified by the community. We do a background check, make sure they're not, a criminal or a sex offender or
Hmm.
anything like that.
Hmm. Hmm.
They get qualified. They transact that sale. New owner moves in, takes over the responsibility of that lot rent. So there's never a downside or down period of time
Yeah.
to where you're not collecting rent. So you don't have that gap of revenue that you might have in an apartment that you've got move out. Maybe it takes you a couple weeks to make ready, couple more weeks to market. And so you got a month, maybe 2 months in worst case scenario of no revenue in that particular unit. So that doesn't exist in a mobile home park to where the resident owns the actual home itself.
Gotcha. Now it sounds really compelling. So what's the downside of mobile home park investing?
Yeah, it's a great question. I think one of I don't know if it's
Or
never
maybe it's a
anything.
risk, you
Yeah,
know?
more of a risk than anything else. I mean, obviously, in the throughout the U.S., there's different areas that have different natural disasters that occur. Florida, we get hurricanes down here. The Gulf Coast, we get
Mhm.
hurricanes. Out west, you get earthquakes, or in the Midwest, you get tornadoes. And so, I'd say tornadoes are probably the biggest of all those risks.
Mhm.
If a tornado rips through a mobile home park, more than likely it's probably going to do a lot more damage than that of an apartment complex. And where the challenge comes into play is, right, both of them would experience vacancies if a tornado came through. However, with a mobile home park, you've got physical units that are owned by these individual tenants. There's no guarantee that they're going to bring that home back in. And so
Right.
what happens a lot of times, there's two different instances that typically occur. Number one, like all of our mobile home parks are listed. FEMA's got an ongoing list.
Mhm.
And our parks are listed in any given market that we own and on FEMA's list, so that if a natural disaster occurs, such as a hurricane or a tornado, and it wipes out, tens or hundreds of homes in that area, they got people that are displaced. They need some sort of temporary housing. What FEMA does quite often, pretty much every time, is in a mobile home park or an RV park, that infrastructure most of the time's underground. It doesn't get damaged, right? The water lines don't get damaged, sewer lines don't get damaged. So that is the quickest path for temporary housing, is by FEMA basically manufacturing, a bunch of mobile homes and putting them back in these mobile home parks. And so
Yeah.
that typically occurs. And then there's a path to purchase those homes down the road once the folks move out and what have you. And so that's something that we are signed up with in every market that we're in. And then on the flip side, that we've got, loss of income or, business interruption insurance that would essentially pay us for up to 18 months if we experience a severe loss. And so, but really the big challenge is getting those lots reoccupied. Again, not banking on FEMA to do it. If you had to do it yourself, more than likely you'd have to go probably buy a bunch of home inventory and bring it in and then turn around and sell it to reoccupy that mobile home park quickly. You could wait for natural infill to occur for people to move a home in, but more than likely the faster path would be, and to be very capital intensive, would be to go purchase, let's say you lost 100 homes and the folks aren't moving them back in, go purchase 100 mobile homes, bring them in, and then create a sales program to find new residents to purchase and move in. So I think that's a legitimate, that is the biggest risk. And it's, if you own parks in Florida, every time they're, the Weather Channel is following a hurricane, that's what you think of, right? And we've owned, we don't own anything in Florida today, but we've owned stuff. Most of the time it's been inland, like Central Florida, but even Central Florida gets, impacts from hurricanes. They get high winds or tornadoes that whip up and things of that nature. And I could tell you that there's been sleepless nights here over the last 5 years when we owned in Florida of, God, man, I just don't want to have to deal with, with this, tree falling or homes getting ripped out. And obviously, folks possibly being injured and what have you. And so, but I think there's that type of risk pretty much anywhere you own in the country. Maybe up north, the biggest risk is like you get 8 feet of snow, right? It's not as bad as a tornado or a hurricane or an earthquake, but or wildfires out west, right? You got wildfires you got to deal with as well. So in any event, that's the biggest one and biggest risk in mobile home parks.
Gotcha. So it sounds like you watch the Weather Channel maybe a little more closely than the rest of us.
Yeah, I do.
Well, and I appreciate you sharing. I mean, there's risks with everything, right? So I appreciate you sharing those, and risks are all about how you mitigate them, right? And it sounds like you guys have taken steps to do that, and that's interesting. It's pretty creative. So I appreciate you sharing those things. Well, Kevin, it's been awesome having you on to share so much value. Before I let you go, love to take you through our keys to success. I've got 4 questions I want to ask you. First one is, what is one question that every investor should ask their deal sponsor? So like if you only got one question as an investor.
Yeah, no, that is a great question. And I think that, I think the question that most folks are going to ask is about, the track record. But ultimately, I think what's more important than the actual track record is, what is the plan B in the event something doesn't go as planned with that particular property, financially as planned with that particular property. Like do they have a plan in place? And if so, what is that? I want to know what the fallback plan is. And also if they're financially capable of, carrying the weight and the burden of pulling that property through any of those variables that might come up. Because as you and I know that not every deal goes as planned. Some exceed expectations and some never meet expectations. And so ultimately, what is that plan? What's that look like? And ultimately, how are they going to execute on it?
Yeah, that's a great point. And like our head of underwriting, he has a quote that I love. He said, all pro formas are wrong. He's like, every underwriting is wrong. You can either be wrong in a good way or wrong in a bad way. Yeah. So I appreciate that. And what's plan B and how do you manage the downside risk? What are you most proud of in your career?
That's a great question. I think just generally speaking, I've got young kids and I've got a wonderful wife, and I attribute the flexibility I have to spend a lot of time with them and to quality time with them. And I wouldn't, if I just worked the normal 9 to 5 or, just, hustled, the normal W-2, I probably wouldn't have that. And I see that is a somewhat of a resentment from a lot of folks that realize later on in life that they missed a lot of quality moments with their family. And so I can only attribute that quality time with my family to my career in real estate.
Yeah, I really appreciate that. I mean, that is really what set me down this path too, of wanting to be around when my kids grow up. So I
Yeah.
100% get that. What is one book that everybody should read?
The Go Giver. That's the one that comes to
It's a
mind.
good one.
It's probably the
Yeah.
one I've gifted more than any other book to, friends and associates and employees. And it's short, it's concise, and it's very
Hmm.
impactful.
Hmm. Absolutely. And then what is your number one key to success?
Full integrity. Do what you say you're going to do and do it right.
That
Simple as that.
is the most important thing. Really what matters. It is.
Yeah.
I mean, we talk about who your sponsor is going to be or who you're going to trust with your money. You've got to have somebody that has integrity.
Yep. Absolutely. Without integrity, nothing else really matters.
That's right. Absolutely. So Kevin, I mean, man, thanks for coming on. This has been awesome. Like I said, avid listener of your podcast. So this is cool for me to have you on and kind of come full circle here. And if folks want to get a hold of you and they want to learn more about what you're doing, how can folks reach out to you?
Yeah, they can, one of two places, the best place to go, either for the company side of things, if you learn what we're doing in the mobile home park or the parking space, you can go to sunrisecapitalinvestors.com. And then as far as me personally, if you want to just get a better sense of who I am and the things I do, and even listen to the podcast I host, you can go to kevinbupp.com. So either one of those also has a contact us page. And so if someone wants to reach out, just go ahead and fill out one of those forms. And ultimately it makes its way back to me.
Awesome. Well, once again, thanks, Kevin, and have a great rest of your day.
Kent, thanks for having me, man. It's been a lot of fun. Appreciate you having me on.
Yeah, awesome. It's been my pleasure.